Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report so twisty it's practically doing the limbo. We're looking at Microbot Medical, a company hoping to make surgery smaller and robots bigger, but will their financial health keep them on the operating table or are they flatlining? Let's decode the details. This report is about shares of stock that might be sold by some of Microbot's current stockholders. It's not about Microbot selling new stock themselves. The company won't get any money from these sales, which is a key difference to keep in mind. The report states very clearly that investing in Microbot stock comes with a high degree of risk. That's not exactly a sales pitch. This highlights potential problems and uncertainties that could cause Microbot's results to be very different from what they expect or hope for. It's a big flashing warning sign. Microbot hasn't made any money from sales. Instead, they've been losing money and they expect that to continue. They're investing heavily in research and development, particularly for their Liberty endovascular robotic surgical system. That's their main project. They don't expect to generate significant revenue, real sales money, until they actually have products to sell, and they're not sure when that will be. The company says it needs more money to keep going. If they can't get that money when they need it, they might have to slow down or even stop some of their projects. That could make it harder for them to develop and sell products, which would endanger the whole enterprise. Microbot is betting almost everything on one product, the Liberty system. If this system doesn't work out, is delayed, or is a commercial failure, Microbot's business will be in big trouble. All their eggs are in one basket. There's no guarantee that all the work Microbot is doing in research and development will actually lead to successful products. The development and commercialization goals might not be met on time or at all. It's a risky process with no guarantee of a payoff. Microbot had to give back some technology that was supposed to be part of their one and done feature because they didn't meet certain deadlines. Now they have to reacquire the technology and it may affect our ability to develop and commercialize or materially delay the development and commercialization of our one and done registered trademark feature. To keep developing their robotic surgical system, Microbot needs to get parts from other companies. Delays in getting those parts could really mess up their timeline and ability to make and package devices. There are delays caused by the Israel-Hamas war currently. People won't buy Microbot's product unless it can be made and sold at attractive prices. If they can't produce the Liberty system for a reasonable price, no one will want it. This is a basic test that all companies must deal with. Microbot doesn't make its own products. They rely on other companies to do it for them, which means they have less control over things. This may lead to parts shortage, quality issues, or even those other companies ending agreement. If doctors and hospitals don't think Microbot's products are safe and effective compared to what's already out there, then Microbot won't be successful. Getting people to switch to a new technology is a big challenge. Microbot has facilities in Israel, which means what happens there politically and economically can affect them. The ongoing war and general instability is a risk for them because they operate in a tough region. Microbot pays for some of its expenses in Israeli money but reports its finances in dollars. That means changes in the exchange rate between the dollar and the Israeli currency can mess with their costs. The company admits the existing risks relating to our operations in Israel are being exacerbated by the current military actions and operations and related activities that commenced with the surprise attack on the state of Israel on October 7th, 2023. Microbot runs a lot of its operations out of Israel, so any political problem, economic change, or military action there could really hurt their business. The price of Microbot's stock could go up and down a lot. It can be affected by all sorts of things like how well the company is doing, what the market is like in general, and even just rumors or speculation. If the people holding these warrants and options decide to use them, it will create a bunch of new shares. This could lower the value of the shares that current stockholders already own. Microbot submitted a $510K pre-market notification to the US Food and Drug Administration, FDA, for our Liberty registered trademark endovascular robotic system. This was following the successful completion of our multi-center single-arm trial to evaluate the performance and safety of Liberty registered trademark in human subjects undergoing peripheral vascular interventions. The company anticipates FDA marketing clearance during the second quarter of 2025, with US commercialization activities expected to commence after the clearance. The company also announced that it has successfully completed all biocompatibility tests as required by its investigational device exemption IDE application and received full approval for the IDE study from the FDA. The company entered into an agreement with Emory University, which will allow the parties to evaluate and explore the potential for a future collaboration in connection with autonomous robotics in endovascular procedures. Emory University will assume the responsibility of exploring the feasibility of integrating the Liberty registered trademark endovascular robotics surgical system with an imaging system to create an autonomous robotic system for endovascular procedures. If Microbot fails to meet Nasdaq's listing standards, the stock could get delisted. The company has effected a 1-15 reverse stock split in the past and can effect another one. If the stock gets removed from the exchange, it could become much harder to trade and the stock price could crash. The report states the loss on legal settlement net for the year ended December 31st, 2023 is related to the January 2024 issuance of restricted shares of our common stock to settle the lawsuit pursuant to the settlement agreement. This is the final resolution of the lawsuit. If Microbot receives funding from the Israeli government, there are strings attached. They might not be able to move their technology or manufacturing out of Israel without permission, or they might have to pay a hefty fee. Some of Microbot's employees may need to leave work for military reserve duty in Israel, which could disrupt their operations. They're a small company with only 20 people and their leadership team takes a pay cut, although the company has since reinstated the officers to their previous pay grade. If executives leave, the company may find it hard to find someone with those needed skill. Microbot is trying to protect its brand by trademarking its name and logo. Now, stepping back from the details, what does all this mean? Well, Microbot's direction is difficult to say. They're pushing forward with a potentially revolutionary surgical robot, but they are subject to the financial risks of a small development stage company. That said, they cleared a lot of risks. Despite the risks, there's a path to success. Their new product is on track for release, which has been boosted by a partnership with Emory University, with sales numbers estimated to be 15 to 25% by 2025. Based on the facts presented in this report, a fair valuation range for this stock would be $2.13 to $2.66 because the risk is high, but there seems to be more to come to the business. Microbot Medical gets a slightly bullish assessment for its stock at its current stage. This is a project to watch with lots of uncertainty still in play, but for the brave, the potential could also be in the company. Thanks for watching, and if you're not too shaky from all that surgical talk, please subscribe for more corporate dissections. See you in the next one.